Live. Welcome everyone, and thank you for joining us today for our product recall webinar. Our presenters today are two general liability extraordinaires, Paul Kelly and Rebecca Mint. Before we start the session today, I would like to cover off a few housekeeping topics. Today's webinar will be recorded and the link will be sent to you in the next couple of days. Alternatively, it'll be on our website by the end of the week. So during the session, we invite your comments and questions. Please select the Q&A section on your screen on the bottom right-hand side, and we will get to them at the end of the session. We also have some polling questions. So once Slido pops up, please answer the polls in there. If you have any issues with your sound, try and disconnect or reconnect or use the call-in options provided on your screen. If you cannot see the presentation, please make sure that you are not using a browser or you are outside your company server. In regards to your CPD and CIP points, a certificate will be emailed to you by tomorrow, and you can claim the points on either the NEBRA or ANZIIF websites. So without further ado, I'm going to hand you over to our presenters today.
Thank you. Hi, everyone.
Thanks, Maria.
Hi, for those, I think most people will be familiar with me, definitely in Queensland, Northern Territory, and those people lucky enough in Northern New South Wales. I've been with Berkeley for almost 10 years in the role as Queensland and Northern Territory State Manager, as well as Liability Underwriter. I have worked for other insurers, brokers in both Brisbane and Sydney, and been in the game for around about 30 years. So I know my youthful looks belie that, but you know, we do acquire a bit of knowledge over that time. And joining me today is Rebecca Mint, who joins us from Sydney.
I've recently joined the Brisbane office, so looking forward to getting to know all of the Queensland brokers. I've been with Berkeley for about 5 years and underwriting for almost 8 years. So again, I've worked with an agency, I've worked with an insurer. And yeah, I underwrite fin lines and liability. So we do everything in the Brisbane office. So it's good to be here today and good to be talking to you all about recall. So it's definitely a subject that we get plenty of questions about. So
yeah, and it's, I suppose too, it's been one of those things over the years that one certain insurer has included this coverage automatically as a rule generally under their policy. I believe they've ceased that recently. So we do get a lot of queries from brokers. Also too, for those that are steadfast brokers, you'll be familiar with the SETP system, which again does have default options for product recall on there. Again, whilst it's an automated system, it's one again where we do require some information before we are keen to provide that sort of coverage. So
absolutely. Yeah, and I think when you look at the claims examples we have, you can see exactly why it's something that really needs to be underwritten. But we'll discuss that a little bit more in future in the latter end of the presentation. So basically, by the end of today's presentation, we really hope that you will have an understanding of recall coverage. So as some of you might be aware, there are 2 different types in the market. So you have what is called a recall expenses extension, which is what Berkeley offer. And then you have what we refer to as a full-blown recall. So we'll be going through the differences and what you should know about each one, and also talking a little bit more about the extension because that's what we are familiar with. So as well as that, you know, you as a broker should be able to understand a little bit more about your client requirements when it comes to the recall coverage. And yeah, it is a pretty simple cover to understand. It's not very complicated in the wording of our endorsement, at least. But I definitely, you know, I was saying before this, I always find recall claims very exciting because I feel like everyone can sort of connect to them. Everyone's sort of been in a situation where they've had a product recall, and you know, everyone of course is very concerned for their safety and the safety of others and their family members.
And I think that's one of the things to remember these days is that, you know, with consumers being more vocal and also regulatory authorities more active in this area, they are obviously looking for greater responses from manufacturers and suppliers and on a timely basis. So it is probably something that should be always discussed with clients, but it always then becomes a question of are they willing to pay for it? But that aside, let's have a look and see what Yeah.
As Maria said, we will have we'll have 3 polling questions. So we'll introduce each question. So yes, listen carefully to the content that we're going to be covering.
Okay, what is product recall coverage? So obviously, in simple terms, what we're looking at, it is a coverage for the costs associated with recalling a product due to safety concerns or defects, typically purchased obviously by manufacturers, distributors, or retailers to protect against the financial impact of a recall. Again, too, it should be mentioned that it can be either initiated by a regulatory authority, such as the ACCC, who may require a product to be recalled, or it could also be initiated by the insured when they become aware of a defect or potential for injury or harm arising out of their products. The other main things to consider there in the recall expense cover are the cost of notifying customers. Obviously, you need to keep them informed about the potential harm from their product. The cost of retrieving the product, because obviously it could be out amongst a number of different customers, markets. So the cost to bring that product back, the cost of disposing of the product, because it is unlikely that you'll be able to retrieve the product and, how can I put it, reuse it or repackage it. It's obviously, from our point of view, a first party loss. So we're not looking to pick up third party expenses associated with that. And also there is a small PR cost. Now, again, this needs to be distinguished between a full recall cover and a expenses cover, which will generally limit it to advertising on the media, TV and radio about the recall being initiated. Okay, I think the other thing too, and you can just see on the slide there, we've taken a extract from the ACCC recall page, and you can see the recalls that have been initiated against various insureds and the products and the date that they have been posted there. So again, that's available for anyone to have a look at. And it's probably a good starting point too if you do have a client that has said to you, yes, we've got a perfect track record. We've never had a problem with our product. You can always search on there just to confirm that that is the case.
Absolutely. And you'd be surprised the amount of duplicate products that are on the ACCC recall website. We'll go into that a little bit in later down the presentation. But I guess what we also wanted to really put across with this webinar is the fact that it can happen to any client. So we've a range of claims examples. And if you do have a look at the ACCC website or the TGA website where they post TGA related products, or the food safety website is the one that's concerned with food recalls. If you have a look, you can just see, the amount of things that can happen. So just keep on top of those websites just so you can stay as well informed as possible on behalf of your clients.
Okay.
So we will be going through now 2 very large and well-known recall situations, just to give you an idea of the sheer size that some of them can go into.
So I suppose most people, particularly here in Queensland, will be familiar with a claim from a few years ago where there was a contamination of strawberries where needles were found inside the product. And it was not only just the one incident, there were a number of copycat incidents occurred in other brands, not only in Queensland but across Australia. So again, it does tend to bring out, how could I say, the bad in some people for whatever reason. But by the end of September, there were more than 200 notifications of tampering incidents that had been made nationally. And the one that was able to be traced back was the Berrylicious one through their various brands of berries and products that they sold, and they were removed from sale. But you would also recall the scenes on TV where there were dump trucks going to tips, basically offloading tons and tons of strawberries and other products that were no longer able to be sold in the market. And I think it also highlights too, probably the problem that faces some of these suppliers into a market is that effectively there was no market for their product because everyone's confidence had been destroyed.
Yeah. I think in this situation, especially, you can see the importance of managing your brand and getting the right PR out if your company does have a situation like this. I remember when this was happening, the government directive at the time when it first happened was just to throw the strawberries away, which is where we saw the suppliers unable to offload all of their product, and then they changed the media message to just cut up your strawberries before you have them, and then that seemed to give everyone a little bit of confidence in buying the product again. So yeah, a good example on those points, I think.
Yeah, again, too, it's a consumer product that has high volumes. It also, too, I suppose the other added concern, particularly with things like strawberries, parents often give them to their children, so it raises the fear factor, the concern as well when one of these incidents occurs. So another good one that definitely people probably from Queensland will recall, but also too, it had a nationwide impact as well. Back in 2002, Heron Pharmaceuticals, which was located here in Brisbane, manufactured a range of different products, and one of them was paracetamol, and they used to supply obviously to pharmacies, grocery chains and so on, and there was a threat against them to extort money from them on the basis that some of their products, or a lot of their products, were potentially contaminated with strychnine, and the company was asked to pay $50,000 as I suppose you'd call it a ransom. Heron was forced to obviously to recall their products, and you can imagine Australia-wide, and as a result of that, they were faced with a difficult situation. Was it close up shop? What they actually did, and you will see these days that in most of the packages of paracetamol and other sort of potential pharmaceuticals that can have problems with being tampered with, there is that plastic seal with the tag around it so that they can ensure that packets haven't been tampered with. And obviously Heron survived and are still, producing product. What you can see on screen too is obviously another form of the packaging as well, where they're put in those bubble wraps so that you can tell, hopefully, that nothing's been tampered with. Obviously, there's always a way around it, but generally it restores people's confidence when they open a package to ensure that, it seems to be fine.
Yeah. And we couldn't find any information on this one on how much it actually cost them to recall these products, but they ended up having to recall 70 different paracetamol products. So I can only imagine the cost of that was pretty enormous. Yeah, and I think what's interesting with both the claims that we've also discussed is the fact that they're both tampering and extortion related.
Yeah, and that's, I suppose, one of the things too that a lot of these recall claims do relate to things like that. Not always. You might also recall, if you're as old as me, back in the 80s, Perrier, on a global basis, recalled their Perrier mineral water because it was found to be contaminated through a couple of plants with benzene leaking into the water. So you can imagine on a global basis the cost of having to do that and retrieve all the products and then rebuild the brand.
Yeah. So we're just going to move on to why the coverage is necessary. If you don't have an idea on that after us discussing the last two claims, then maybe you will after this slide. But basically, by having that cover in place, your client will be protected financially from, you know, a lot of the costs involved in a recall. Like we said, there is a big difference between a recall extension, a recall expenses extension, and a full-blown recall cover, but it all helps. Again, like we said, the importance with the Berry incident, the importance of having good PR consulting at hand. That's generally something that can be included in a recall coverage. So, you know, access to PR advice externally. And I would say when you're looking at your clients, it's especially important to consider this cover and discuss this coverage with them, even if it is just the expenses extension. If they are related in the industries of food, children, or medical. Again, if you look at the ACCC website, TGA websites, or the food, you know, there is plenty of recalls there. I think the food recalls per year are probably about 70 or 80. So it's not a lot in the grand scheme of things, but you certainly wouldn't want your client to experience one of them and not have any cover at hand.
Yeah, and again, some of the things that we mentioned there to take into consideration, supply chain. Very often these days with clients wanting, you know, next day delivery, they'll have various warehouses around the country, maybe not even theirs, that are operated by third parties. So again, you just think of where their products are not necessarily just coming from the insured's premises. So that's another consideration. We also mentioned supplying to large retailers, because that seems to be the goal for a lot of people, to be able to provide their product to large grocery or merchandise groups. And if you think about someone like Woolworths or Coles, you know, how many stores they have Australia-wide, and if you've got your products on their shelves, that could be a concern, particularly too, and as brokers, you're no doubt aware of clients signing contracts, and after the contract has been signed, they come to you and mention the fact that Woolworths has just asked for evidence that they have a product recall policy in place. And you go, when did they ask for that? Oh, about a year ago when we signed the contract. So again, very often there may be a contractual requirement for your insureds to have the cover in place. Bearing in mind too, there would be a contractual liability exclusion under your general liability policy. So that's something else to bear in mind. And again, I think it's something every year when you do a renewal, look at asking the question, have you entered into any contracts to third parties to supply your goods, and see what may come out of that. The other thing too, that you can see in all these too, is the reputational damage. And whilst that is not necessarily covered under expenses policy, that assistance and recall type management can be provided for under a more full product recall cover.
Absolutely. And I think just talking back to supply chains, I think it's really important to consider the coverage if your client is supplying a component. I think a good example of a recall situation that occurred with a component is probably one that everyone, if you drive a car in the last 10 years, you're probably familiar with it. It's the Takata airbag situation. So Takata ended up filing for bankruptcy in 2017 because they just couldn't get that recall away from their brand image. They just completely failed. I think the cost of that recall, it was across tens of millions of vehicles across various different brands of car manufacturers, and I think it amounted to like $24 billion. So yeah, just something to consider.
All right, now
So
we've got a poll question.
Oh, oopsie. Poll question.
Yes.
So yes, we do have a poll question. So first poll question of the afternoon. So between the years 2012 and 2021, the FSA and Z coordinated 776 food recalls. What do you think the reason for most of these recalls were? So do you think it was microbial contamination? Was it foreign matter, undeclared allergens, or incorrect labeling? So we'll just give everyone a moment to answer the poll question. See what I was saying with the large amount of recalls they do. So it's roughly 70 to 80 per year. Okay, so the vast majority of you, with 55% of the responses, have said that incorrect labeling is the most common type of food recall reason we see. That is actually not right. The biggest reason for initiating a food recall is actually undeclared allergens, with 46% of all recalls done due to this. And actually the biggest culprit of that is undeclaring milk. So that's the biggest one.
As you're aware, when you go down to your cafe, you've got the choice of almond milk, or other sort of associated things. The other thing too, which is quite common these two, is nut allergies, and that seems to be on the rise. So again, innocently putting things in a product but not causing or not identifying them can be a big concern.
And I suppose the reason why you should have a really tight control over your supply chain as well, right? So
yes,
just so you know exactly everything that's going into your food product.
And that, again, that's something I think we'll talk a little bit about further on in this presentation.
Excellent. Okay, we'll move on.
Okay, so what does product recall expenses usually cover? And again, we'll start with the basic product recall expense extension as opposed to a full-blown recall cover. So first of all, obviously where there's the regulatory request for the potential for bodily injury or property damage, and this can be due to a number of different factors: omission of an ingredient or component, accidental introduction or substitution of deleterious ingredient or component, error or deficiency in the manufacture, design, blending, mixing, compounding, or labelling of the product. And if you look at those, about some of the things that we've just discussed, particularly after that last poll, it could be where there has been a change in the supplier of a product. And again, you've got peanuts from one person and then they're not available, or you take it from another company and it may not be the same consistency. And from first-hand experience, I had a company that was involved in growing of peanuts, and when the supply here in Australia was low, they used to have to import peanuts from around the world. Some came from America, some from India, and some from Argentina, and there was a huge variance in the quality of the peanuts that were supplied. So again, they had to do rigorous testing to ensure that their product was up to the standard that was required for their customers. So again, something to be mindful. Omission, pretty straightforward. If you forget to put something in, I don't know, like making a cake, you forget to put the egg in and it all falls apart. Same thing here. Error or deficiency in the manufacturer design, same thing. It hasn't been mixed together properly. Interesting enough too, labelling, just bear that in mind, because again, the label and packaging form part of the product as well. So there's potential there if something should go on. Briefly, we have mentioned there too, the communication costs, including getting advice from third parties. Generally under the recall expenses, it's going to be limited to, advertising in the media. Transport and destruction of recall goods, again, speaks for itself. Hire of additional personnel to assist with retrieving the products, the costs associated with hiring those people, or it may even involve overtime from your own staff. Those costs will be picked up as well. When you've got the millions of products from all around Australia, obviously you may not be able to store them at your premises. So again, or it might be easier to store them at third-party premises if they're interstate. Again, the policy will extend to pick up those costs. Now, some of the things that we just want to point out, it's not designed to be a compensation policy to a third party. So bear in mind, this is an extension to a public and products liability policy. So if there is injury or damage to a third party, that will be picked up by the main policy. Okay. It's a first party loss, but it does not extend to include the loss of the insured's product. So, if something was damaged by fire, that would obviously be picked up there, and the loss of income associated with the removal of those products is not covered under the policy. One of the big things too, again, as we've mentioned in some of these cases, is the loss of consumer confidence and the ability to be able to restore your product's reputation and be able to actually sell the product and continue to trade. It won't cover the cost of regaining that customer approval. And quite obviously too, if we've recalled the product and it's there but can be perhaps reused, it's not going to be covered by this policy. So again, I'll give you an example of that, where we had, I had an insured when I was a broker who had some toys, and the packaging was found to be incorrect. It wasn't compliant with Australian standards. They were therefore required by the ACCC to recall the product. There was nothing wrong with the product. If they'd been able to repackage it, they could have sold it, but the cost of taking the toys out of the packaging, then repackage them, and that was prohibitive. So again, generally that's why when products are withdrawn, they are destroyed rather than have them lying around or being sold off as slightly damaged goods. So again, when clients said, oh, well, I want to be able to cover the costs of the goods, unfortunately, not what we'll be able to cover here.
No. I think another thing to point out here, being that the first two large claims that we saw were due to tampering, that sort of claim is unlikely going to be covered under recall expenses. If you see the second point on this slide, we will only cover the accidental introduction or substitution of an additional ingredient or component. So tampering is, of course, intentional, so unlikely to be covered.
Absolutely.
Yeah. So I think the key thing to remember when it comes to a recall expenses cover or extension is just that word expenses. So just think about the cost of taking something off a shelf, transporting, etc. As Paul said, you're not going to be covering any first party loss or anything else like that. So
another poll question to
yes,
make sure you're awake.
Sure, I'm awake too, so I know when the poll questions are coming. So this one's a pretty simple one. So in the event of a recall, a client hires additional staff and leases some temporary storage facilities. Would this likely be covered under Berkeley's recall expenses extension? Let's give you a few moments to answer that one. Should be nice and easy if you've been listening. Okay, so it appears most people have been listening. So 97% of you have answered correctly with yes, this would be likely covered under Berkeley's recall expenses extension. So well done, you're all listening, which is great. Okay, so moving on to talking a bit more about what a full-blown recall coverage is likely to include.
Okay. Again, I think what I would say here is there's probably some slightly different bells and whistles depending on the insurer, and also too what they'd be prepared to offer depending on the nature of the client's products and businesses. And we'll address some of those things a little bit later too. in some of the underwriting considerations, because they do have an impact on what people may be prepared to offer, and also the extent of the limits that they're prepared to put out as well. So generally with a full recall cover, as with the expenses, they'll include those costs, but they'll also ensure costs associated with limiting reputational damage. And as we've seen, some of these claims can have a significant loss of reputation attached to them. So a very important thing there. A first party loss, again, it may be, how can I put it, not necessarily something they're willing to offer, depending on the nature of the product. And, you know, a good example would be something like you've had a recall claim for strawberries. Well, you know, the shelf life of a strawberry is not much. So probably not something they're likely to offer on that sort of product. Okay. Replacement costs, again, it's a bit hard to replace a strawberry. So again, depending on the product, may or may not be covered. Probably the main couple are the malicious product tampering. And as you've seen with the heron example, what has the insured done to ensure that their product is less likely to be tampered with? And also too, I suppose, some products themselves, not necessarily maliciously, but just in the general course of manufacturing a product, those sort of things that can creep in. You know, you think of food products when they're being processed. One of the particular things with peanuts was stones look a bit like peanuts. So obviously scanners, metal detectors, those sorts of things. Again, not only for the general products, but also malicious product tampering. Product extortion, as we saw in the case of heron, not only followed on from tampering, but also product extortion. And again, it's one of those things that I suppose
difficult to control, I guess, right? So
yeah, hard to control. But also too, it's the sort of thing where you probably would require people that are familiar in this area to be able to give you advice as to the likelihood of that. And again, I think a lot of the considerations for that would be if you're writing product here in Australia, it might be easier to assess, but if you're offering your product elsewhere in the world, a lot more difficult and complicated to probably underwrite from here in Australia.
So I guess we're going to talk a little bit now about what you should be looking at from the broking side. So Paul's going to discuss this as an ex-broker. Yeah, what should brokers be looking at in terms of which one they offer their client?
Yeah. Again, I suppose the first question will be the size of the business. Generally, from a Berkeley point of view, we're dealing in that SME, small corporate business. So the majority of the exposure will be Australia, New Zealand, maybe Asia. So again, the size of the business may dictate what you're looking for. Again, as we mentioned, the industries that you're potentially involved in, you know, things like food, toys, component manufacturers. You know, we've heard about the Takata airbag. If you're a supplier of one particular product, one thing that would spring to mind would be if you're supplier of yeast. Now you think straight away of bakeries, cake shops, those sorts of things. Sure, that's one market, but also a lot of food products, and also don't forget brewing. So it could be a wide range of industries that you supply to, and they could have a big impact. And I suppose from our point of view, they're two sorts of industries, food and toys, that we're not greatly excited by. The other thing too, I see a lot of, not only on SCT, but generally in the open market, a lot of these homegrown industries that are making body lotions and creams, supplements and so on. Again, something that you'd probably, from a point of view of, be very, very careful in looking at that.
Yeah. I guess make sure your client is across the basic things such as, batch controlling, testing, just in case there is a situation that they can pinpoint exactly what batch is affected. And yeah, in the case of recalls, quick action is really, really important to prevent any actual bodily injury or property damage from happening. So
Yeah, exactly. I think also too, these days, increasingly in Australia and other countries, we've relied on imports from other countries. So that would impose a duty of care on the importer, who will automatically be assumed to be the manufacturer under the law. So again, one of the big concerns, and that's why we often put the endorsement on the policy, that the products meet Australian standards, for that very reason, not necessarily because it's a product that we have here in Australia. Does it meet our requirements? So again, we need to sort of be comfortable with those sort of imports. And I think one of the things that you found, Beck, there was an interesting one.
with the rattle. So I guess, we just really wanted to stress the importance of doing your own research as an importer, because a lot of the time, even when we're asking in a non-recall related way, a lot of the time, if you're importing from abroad, you rely on the certification from the manufacturer saying that it meets Australian standards, and it's not always correct. I did see quite a large D&C claim a few years ago where it was a construction company building an entire multi-story residential tower, and the windows that they had sourced for the building were from China. The Chinese manufacturer said that they met the Australian standards for energy efficiency. The claim occurred because they didn't, and hence when they did their own testing here in Australia, they found that they actually did not meet the local requirements. So another thing to stress to your clients is, in these high-risk products, do your own testing. So I think a good example of this is what I happened to notice on the ACCC website. I noticed a lot of rattles coming up, and I was like, what are all these rattles about? And looking into them, there had been 15 different rattle recalls issued over the last 12 months. And if you look on the ACCC website, you'll see all the rattles are the exact same rattle, possibly from the same manufacturer, who knows, but in the space of a year, 15 recalls. So they were continuously being imported into Australia, and no one had done their due diligence, or 15 importers or 14 importers had not done their due diligence and researched on the ACCC website. So it's quite surprising when you look at it, especially for something like a rattle. So,
and again, I think you'll be aware too, when sometimes you get that phone call on a Friday afternoon from someone who's really excited that they've got the product that's going to make a fortune, and you sort of send it off to the insurer, and the insurer goes, hi, yep, we've seen the same product from 5 different brokers. Again, it does cause us some concern. And on that too, again, I think one of the things, the increasing use of drop shipping, whereby you've got a third party contract manufacturer who manufactures the product and supplies it in to your customers directly. What is the quality control? What do you do to check it? How can you check it? And we've seen, obviously, with COVID, the growth of things such as Amazon and other online retailers. We're very cautious around that because, again, generally they're supplied direct into the market, very often in North America. And I think it's a standard requirement under the Amazon contract to have them noted under the policy as a named insured, and also a hold harmless. So again, we're very cautious, obviously, one, in first place insuring it, but to provide recall cover, again, would be something that we would not be keen to look to do. So again, I think it's one of those things that, you need to ask your client. It seems like a good idea at the time, but potentially down the track may be, in fact, a nightmare.
We are seeing a lot more drop shipping risks coming in, and I'm guessing that a lot of brokers are not aware if their client is drop shipping or not. The client obviously is maybe not thinking about the importance of communicating that either. So obviously we're not going even give a recall expenses extension on a drop shipping risk because they have absolutely no control over the quality. So they don't even see the product.
Yeah.
So talking a bit about the Berkeley appetite now. So we've covered a little bit of this throughout the webinar so far, but I guess, our extension is not intended to be a full-blown recall cover, and we're quite selective in the clients that we do offer it to. So we try to focus on those lower turnover companies that are not involved in the high risk areas. Given the limits that we're offering, I typically won't offer any more than maybe $250,000 or $500,000 on a recall extension, because I also don't want the client to think, or the broker to think, that it is a full-blown cover, and I try to communicate that it is expenses only. Therefore, for that turnover company, you don't need that much of a limit. But we prefer products that can just be taken off a shelf.
Yeah.
We've got a good claims example coming up where we're talking about a component manufacturer, or not so much a component manufacturer, but where a component situation occurred, and you can sort of see the differences in how much that claim amounted to.
Yeah, it's a lot easier if we're talking about one piece from a product range than multiple locations and multiple products that potentially it could be affected by. Also, too, again, given that we're here in Australia, we tend to focus on Australian and New Zealand products, and we're not obviously seeking global range of products, because you can imagine the cost of recalling products on a global basis would very quickly eat up a limit under the policy. So again, those that are exporting outside of Australia and New Zealand are probably not keen to look at those. We just mentioned the component parts again. The fact that we would like people to be able to demonstrate that they do have a process in place for one, checking their own quality control of the products, and that may involve batch testing, random sampling, that they can keep a record of that. Again, the process of having metal detection, those sorts of things, laser scanners to assist in that. Also, too, even from a point of view of just having a process in place, and that's why we say, do you have a recall plan? We're not asking for something that's the size of a telephone book, or maybe a lot of people don't know what a telephone book is these days, but rest assured they're fairly thick. So again, there must be some procedure in place that if there is a problem associated with the product, what happens? Who contacts the suppliers? Who organises the transport to go and pick them up, to come back to have them destroyed? Because that's where a lot of time is wasted, and also a lot of potential harm could be done if it's a product that may cause injury. And one would expect too, the larger the company, they should have a full recall coverage plan in place.
Absolutely. And if we get a risk coming in the door, we're asking for recall expenses extension, and we think they should have the full-blown cover, we're going to be unlikely to quote them on the expenses. So.
And I think the other thing too, we often see, and I know the market is tough out there and hard, and we often get the question from the broker, I'd like to be able to offer the client something different to their existing policy, so why not give them some recall coverage? Again, I think you need to think about it first of all, gather some information first before asking for it, and maybe check to see whether it's an industry you want to do, particularly if you're doing SCTP quotes. We see a lot of people that like to tick every box there because they think they get more points and get a cheaper premium. Obviously, if you're looking for recall, we'd want something there to give us confidence that the insured will have the suitable safety measures in place. Okay.
What is next? Here we go. Okay, so next up is our claims examples. On this one, we're going to have a poll as well, so listen carefully. This is a really interesting one. So this one is a manufacturer and distributor of chocolate and confectionery. They sold approximately 30,000 protein bars to a large national chain of chemists. Customers began submitting complaints about the appearance of the product as black spots appeared on the surface of the batch in question. After investigation, it was realized that during production, the salt flakes that the manufacturer normally used in the manufacture of these bars was not available at the time, and the client switched to using larger salt granules. So it was actually these larger salt granules that was causing the black spotted appearance on the surface of the protein bar. So of course, all affected product was recalled because everyone thought it was mold growing on the bars. And this cost them approximately $35,000. So this client in question did have a full-blown recall cover not held with Berkeley. So of course that coverage included first-party loss and again the costs associated with removing and destroying the product that you would have under our expenses extension. So yeah, quick poll question on this one. So in this scenario, are the recall expenses, first party loss aside, are they likely to be covered under the Berkeley recall expenses extension? Yes or no? Okay, so this one was a bit of a trick question. Okay, I'll give you all a few more minutes. Sorry, a few more seconds. Okay, so I think what's important to think about on this question is thinking back to the slide where we were talking about the triggers needed for the Berkeley recall extension to kick in. So you can see in this claims example, the reason for the recall, there was nothing wrong with the bars. It was purely just the salt was different than what they normally use. So it was a recall due to the cosmetic appearance of the bars only. Of course, they couldn't sell them because people thought that it was mold, but it wasn't mold and would not have actually harmed anyone. So in this claim situation, the trigger for our extension actually wasn't there. So we only cover, well, we wouldn't have covered just something, a recall due to a cosmetic reason. So this actually wouldn't have been covered under the Berkeley recall extension. But thankfully, something like this is covered under, or likely to be covered under a full recall. So, okay, so next one. Call this one a bad hangover, which you certainly would have if you drank out of one of these glasses. So this client provides co-pack, promotional, and publishing services. In this situation, they supplied 18,000 beer gift hampers to a large national chain of liquor stores. These hampers contained beer, which was manufactured locally, and a glass mug that was imported. So it was discovered that the glass mug contains little specks of glass that were very difficult to remove. Unfortunately, they only discovered this once all of the hampers had been packaged up, all 18,000 of them, and shipped across to their the major retailer. So, and actually a lot of them have been sold already. So all of the hampers are recalled, resulting in huge costs for the client and the potential loss of a large client for them.
Again, as we mentioned earlier, some of the things there, one would think that the packaging and distribution of the hampers was probably contracted out to a third party, may have even been offshore. And as a result of that, one would question the risk management, quality control checking, because it would have been fairly obvious if someone had checked one of the mugs that there was glass inside the mugs, and then it would have prevented those being sent out and obviously causing some drama. So
Yeah.
again, it highlights one of those issues that we have where we have third parties contracted to provide services that the insured doesn't directly oversee. So as a result, it just tends to highlight that quality control
Definitely.
issue. And I know we seem to harp on it, but it's a very important thing. Brokers often say, oh, you've done this for someone else and it's half the price. Well, the reason it's probably half the price is the fact that they do have quality control and risk management standards in place. Okay.
It was surprising, this one, because when they started opening up the hampers, they found the glass specks in most of them. So, okay. Third claims example. This one is called raspberry and rubber swirl. Not exactly something you want when you're eating ice cream. But this client was a manufacturer and distributor of confectionery and ice cream. They contract manufacture a range of home brand ice cream for a major supermarket chain. Whilst eating a tub of their ice cream, a customer found a rubber band. All tubs of ice cream from this batch were recalled, with costs incurred from transporting and destroying the recalled goods, amounting to approximately $6,500. So this one was a Berkeley claim. As you can see, obviously the recall was initiated because of the fact that ingesting a rubber band is not good for anyone. So
No, not the flavour.
not the flavor.
Again, I think too, one of the things here, it was a comparatively small claim, but again, if you've been supplying to a large national grocery chain, it could have been a lot more severe than that as well.
And as I guess, looking at the contracts again, if you are dealing with major suppliers or supermarkets, retailers, things like that, then they are really going to expect quick action on a recall. So, if you don't and if it's not handled very well, then your client has the risk of losing that client, which could be a substantial amount of their turnover. So important for their business survival.
Yeah, another one which was a claim that we did have. The client was a hospital equipment manufacturer and supplier, and they had manufactured these trolley beds that were supplied to a number of hospitals and nursing homes throughout Australia, and they had faulty brackets which, when in a certain position, caused the bed to collapse under patients at 2 hospitals. Whilst there being no injuries, obviously the hospitals and nursing homes were concerned about their liability for transporting people around in their facilities and contacted the manufacturer. It was found that there was around about 460 beds that were potentially due to be recalled because of the fault or for it to be rectified. This posed some problems in itself, in that obviously with the hospitals and the homes, that was quite a large number of beds to be able to be replaced almost immediately, which really couldn't be done in the time frame by our insured because their supply was not adequate to meet that demand. So how are they going to do this quickly and effectively? And the way to do it was determined to send a technician to each of the states and then go through on a hospital by hospital basis to repair them as quickly as possible. And that's what they undertook. And it was around about $78,000 to undertake that sort of work in that case. Again, same client had another situation where they used to supply chairs for hospitals and nursing homes for people to be showered, and it was a imported material from Europe that was supposed to be waterproof and also would avoid contamination, that sort of thing. It was found that, again, what had happened, the actual waterproof material cracked and then obviously not only destroyed the padding in the chair, but potentially also could it spread infection to other users of the particular chairs. And in that case, it was a case of withdrawing them and basically destroying the cost to replace, repair was too great. And as such, it was done that way as well. So again, simple things like that can have big consequences.
Absolutely. And that finishes all of our claims examples. So we're just going to finish up with inviting any questions you might have for us. We've still got 5 minutes left, so plenty of time to ask a few questions. And I guess the key takeaways from the webinar today, I've included some links here. So you have the link for the TGA website, the food recall website, and the ACCC recall website as well. And I've also included, we spoke about the reason for the most food recalls earlier. So there's a link there, the second link, which includes some really interesting food recall statistics if you are interested in looking that up. So yeah, again, I think one of the best ways to sort of keep on tabs on recall and how it's affecting your clients and what their exposure is for recall is just keeping on top of these websites. So, and of
We do have a few questions.
Excellent.
I'll start with the first one. Does the trigger require actual defect or include fear of defect that may cause potential safety concern?
Okay, so 2 parts. And again, I think in the initial coverage we mentioned there, where a regulatory body may initiate a recall of a product. That's one. Or the second part 2 would be, yes, if there's potential for injury or damage, again, the insured might become aware of it and they can initiate the recall themselves.
Okay, another question regarding the BIPD trigger. If the client found an error in presenting the allergen that could potentially cause BI, would the policy cover expenses to recall the product before it harmed?
Again, I think it's like the first one. If there's potential for injury or harm, the client's aware of it. They've taken a proactive step to recall the product. Again, yes, the policy would meet those expenses.
A question in regards to the first claims example. Would the fact that the client deliberately changed the salt flakes act as another reason why the recall claim would have been denied under the Berkeley extension?
I think the main reason why it wouldn't have been covered is because it wouldn't have caused any injury or property damage. So
it's more of a cosmetic appearance.
yeah. So even though it was a deliberate change.
I'll give you an example. And it was, again, under a recall expenses policy, it would not be a claim, but it would most likely be better under a full recall. There's a very large international confectionery manufacturer who manufactured a line of biscuits that were quite easily recognisable by their purple wrapping. And one of the national grocery chains who received the product rejected them and sent them all back because they didn't consider them to be purple enough. Now, there's nothing wrong with the product. The contents are still the contents. It was just more the cosmetic appearance of the packaging that upset the third party. So again,
and that was covered under the full-blown recall.
The full certain part of it was, but again, I think it's one of those things that it's a fine line sometimes. It's a bit like if you go to a dressmaker and order a dress and you look at it and, oh, I don't like it, but it's still a dress.
Okay, maybe time for one more question. What information does Berkeley need to quote a recall extension?
Okay, well, I suppose some of the basic things that we'd like to know, the particular product, how long has it been manufactured by the insured, or is it contracted out to a third party? The processes that they have in place, be it quality control, risk management, a product recall plan, as we discussed. Have they had any claims with the product, or have there been any issues where they've withdrawn a product, changed a formula or so on?
Guess metal detection, if they are food manufacturing, is important
Yeah.
as well. You would expect them to have that.
One would expect if you're a food manufacturer, the expectation is that all those things would be standard. You know, that they have HACCP, you know, good manufacturing processes in place. They can track batches. They know where everything goes. And it would be labelled as such so that they could trace the batches. Because one of the things too that very often happens, we've seen, and that's why they're there, use by dates on products. You know, if products are supplied that they're out of date when they've been supplied, that's not something that we'd be looking to pick up under a recall policy. So there's a fair bit of onus on the insured to get it right. It's not, and again, too, probably one of the reasons why we're not looking to put out big limits is because it's just an expenses. We don't want to be picking up all those other expenses that could be quite high. Again, too, whilst the premiums being charged are not high, it's quite easy to exhaust a $50,000 or $100,000 limit very quickly for a premium that might have only been, $2,500 to $5,000. And generally, when they've had a limit loss, it's probably something that most people would not consider offering again.
Okay, well, I think we do have a couple more questions, but we can leave it there. Thank you very much, Rebecca and Paul, for today. That was an extremely interesting session. I'm sure everyone that has attended agrees. I think we learned a lot, and there were some very entertaining claims examples as well. So thank you everyone for attending. Thank you, Rebecca and Paul. I hope everyone can join us again for our next session next month. Have a great afternoon.
Thank you.
Thank
See you
you.
guys.
Bye.
Bye.